We're live. Buenas tardes. Good afternoon.
Good afternoon.
Get a link out here. Let's go to YouTube. Let people know that we're streaming.
Yeah, why don't you put up your chart or one of your charts?
Oh, there we go.
You're in a trade right now. What are you on the? Oh, you're on the 2-minute.
This is I'm in a bunch. This is in a trade, and this is in a trade. Although it looks like it might get stopped out. We'll see. But it's had 3 or 2 wins in a row. This one's had 3 wins in a row. Let's go to, here we go, live YouTube. Let's paste this link. Copy. Let's put this over here. All right. That's posted. And let's get the chat up here. Okay. So yeah, it's been a slow start to the year.
It sort of has, yeah. And I think as the year sort of and the days tick on, more and more volume will start coming back into the market, and sort of second week of January, that volume tends to pick up. Good afternoon. How are you this afternoon? But I think that we're starting to get a little bit more volume with each passing day, which is good. It's good for us. And put an end to sort of that holiday trade, which is the worst trading of the year, I think.
Yeah, but sometimes it's takes a week or two for things to settle and volume to resume to sort of some normal level, unless we have some sort of VIX spiking event that brings some volatility into the market. But I thought we were going to have that with the Venezuela situation, but it seems to be pretty timid response. So.
Well, I think the Venezuela situation in general is, it wasn't a starting of a war. It was, I actually thought there was going to be a lot more volatility in oil. And I mean, we saw some volatility in some commodities and a little bit in oil, but we saw a lot more in metals than we saw in actual oil. So
yeah.
I thought it was actually, if anything, sort of regime change and sort of such a major player in the oil world and as well as in the other materials world would have bring in some major volatility in commodities, which is, as a lot of our users and viewers know, we often are trading commodities. So, getting volatility in commodities is a good thing for us. So, I think that I thought there was going to be a lot more that came of that. And, sorry.
And these are the things that can kind of help you in automation to, like, it's not always just set it and forget it, although there are some strategies that you can do that on. But if you feel there's some volatility coming into gold or silver or oil, we have strategies that are pretty versatile that have decent results trading those instruments when volatility kicks in. So definitely always good to have sort of a macro view of the markets.
Yeah. And I mean, I think the hard part for me, sort of as I'm learning more each day, and I think anyone who isn't learning more each day is making mistakes. And while I've been automating and trading for quite some time, I still try and learn every day. And one of the things that always is hard for me to wrap my head around is expectation, and what I think versus what I see. And those can often be very different things. What I think, is sort of my internal bias, sort of thinking there's going to be a lot of volatility that comes into materials and commodities markets. And what I see is sort of a nothing burger. While there is sort of some more volatility than normal, and we've had some crazy up days. I mean, natural gas is up almost 7% today, but gold down 0.7, oil is down 2% today. Let's see, what's silver? Silver's having a pretty nasty down day, but I mean, that's sort of been par for the course over the last couple of weeks with silver. Silver's had a lot of these 5+% ups or down swings. So I don't think that was necessarily Venezuela provoked.
Right.
I think there was some news on silver before that, but yeah. So we're talking about some of our marketplace stuff today, and some of the things that are available. And now, if you want to bring up our marketplace.
Yeah, I will, and hopefully, I think David's going to jump on here in a minute. But
good,
we can talk a little bit about his strategy that they have on the marketplace. But this is our software. I'll make it big screen so you guys can see it. And one of the features that we just released a couple of weeks ago is the marketplace, the little shopping cart here. And this is a developing and growing community of third-party strategies that we collectively have been testing for validity. And we then allow vendors to put their strategies on the store. And most of them, I think all of them actually, are offering 7-day free trials, so people can give them a go, see how they're performing, and see if it fits into their automation portfolio. And it's been pretty awesome. And you can read a description on each strategy, and most of them have a prospectus to come with it, so you know sort of how to run it. Today we're going to talk a little bit more about the Kairos strategy, which has a pretty detailed description here on what it does. And the thing we like about most of the strategies, or a few of the strategies, they're very versatile. And this one is probably one of the most versatile. We have Market Ninja, which we'll talk a little bit more about next week or later this week, which has been performing really well on gold.
Friday afternoon, I think we're going to talk about that one.
Okay. PXR has a couple of opening range strategies that have been excellent, especially on the NASDAQ for those quick opening range moves. Secret Lab is one of our strategies that has been forward tested probably almost for a year now.
Longer than that.
Yeah, great strategy, very versatile. So we're getting more and more. I know somebody just said that they need more info on this. There's more. Every strategy, when you subscribe, comes with a PDF that sort of explains more of a deeper dive into the strategies. But this is one of the reasons we're doing these videos, because I think people get a lot more from actually seeing it and hearing from the developer how they developed it, what the theory behind the strategy is, and how it executes, how it's back tested and forward tested, so you guys can have a better look. But again, the proof is always in the pudding. So for 7 days, you can subscribe to any of these strategies. You can try them out, see how they function. It's not always, is it making me money in that 7-day period? Because every strategy has a drawdown. But you can see historically what that drawdown has been, so you can size it appropriately for your account.
Well, and two, you can sort of get yourself accustomed to and confident that the back test on that strategy matches what happens in reality, and the expectancy in reality should match the expectancy that you see in the back test.
if you look at your P&L and then you look at the trading view and the numbers pretty closely match whether it was a win or a loss, and that's consistently happening, then you know the strategy results are accurate and you can trust the back test. On TradingView, we like to stay within 90 days and optimize everything for the sort of a rolling 90-day. That's markets are always changing and evolving and going through different cycles. So that's the best that we've found to optimize these as you go. But I know quite a few members have been running Kairos the last week or so and have passed multiple evaluations, gotten payouts. Same with Market Ninja. So, and I know Dan runs a number of accounts with sort of smaller sizing, but multiple strategies in the account. So it's kind of balances out pretty nicely. David just joined us.
Today's another day that is really good example of how a portfolio approach sort of salvaged me. I'll use this example. I have one account that I run that this Kairos strategy on. And I also run the Market Ninja strategy on gold, and I run Secret Lab on the Russell 2000. And today the Russell 2000 took a max loss. So that for on the Secret Lab strategy, that's I believe $375, and I'm just on a 50K funded account for this one, and that's a pretty bad day for that strategy. Now, normally, that just ends up being a bad day. It can be a really bad day if my other strategies don't do well, and everything has a bad day at the same time. But what tends to happen more often than not is usually if something's having a bad day, something else is doing well. And if you do well enough at sort of cross-matching instruments, meaning like I'm running MNQ, RTY, and MGC, and if I'm cross-matching instruments with strategies that do different things and trade different strategies, usually one or two of them will do well when the other one isn't doing as well. So that's what happened today. I'm in that account. I'm down $60 because my other strategies sort of picked up for
Right.
that one being red, and my other strategies will be red tomorrow. Maybe the other ones will pick up for that. So it's sort of finding that gentle balance and not oversizing where any one strategy can't be the one that takes you out and kills you.
Yeah, and I think something just executed. Yeah, so this is just part of the chart up here. It's been kind of a sideways day, but I'm up in a couple of accounts, down in a couple, and a couple others across a few different brokers. But that's what Dan was saying. You have that portfolio approach. You have some different things running in different accounts. You're going to be able to sort of average out pretty well across different instruments. But like I was saying, the thing when you get into automation and you're trying new things, it's key just to sort of find a good balance for your accounts. If you're trading one account or multiple accounts, just finding that balance where you can absorb any drawdowns, because nothing is going to be 100% successful 100% of the time. If it is, I want to know about it because I haven't found anything yet.
Well, and Tommy, who's a subscriber of ours, is in the chat on YouTube, and he said, it's great when they all see the same entry. Yeah, yes and no. I mean, if it's right and they all see the same entry, it's phenomenal. That could be a really good day. But if they're all wrong and they saw the same entry, it can be a really bad day, really, really fast. Well,
I had two open at market open today in opposite directions, but they actually both ended up profiting.
Yeah,
it was kind of funny.
We have David with us, who's one of the creators of the Kairos strategy. This is we have a couple on our store that are really versatile and can trade multiple instruments, and this is one of them where you can run this across different instruments with different sizing, and you can almost build your own portfolio just with this strategy. So welcome, thanks for joining us. So wanted to let you explain, talk about that strategy, what made you sort of create it. Yeah, take the floor, talk
This is
about it.
This is
Yeah.
David, everybody.
Can you
Welcome.
hear me pretty well?
Yeah, just fine.
I couldn't figure out which microphone my stuff is going to. So
Yeah, Lee does that every day. So
Yeah, I have 17 microphones, so I got to figure out which one I got to use.
yeah. So I actually, so I have a just a group of guys from that I've met at churches that we all trade together. That's who got me into trading. So really, when my mentor had to step away, I jumped in and was admin of there, and I was looking for really things that could simplify trading, just so you could deal with like the emotions of it and work through those while still being in the markets and still looking at stuff. So that's what kind of led me over to looking at algos. I was doing manual trading before that. I was started as an ORB trader, and then had some good success with that. And then I went into more market profile stuff, and that's where I made a lot more money. And then some options plays, but I wasn't big into it. Mainly futures and some crypto. So when I was looking for stuff, I was just going on like Lee does, which was just going on to all these different discords with these different algos, just seeing what they have, seeing what worked, seeing what didn't work, and that's what kind of made me find my niche and what really worked and what I liked. So one, I like visuals. You can see on Kairos, especially on the indicator version, everything's visual. You have you can see exactly where your risk is, exactly where your take profit is, and you can literally go back and count all the TPs at the top of the screen. So that's just something I like personally. So when I was looking for that, that was the main purpose, was to look for something that guys could come in and they could get started with something and watch a successful trading system kind of play out, whether or not your edge is only like say, because my favorite statistic is win rate differential. So looking at the break-even win rate and then looking at the current win rate of the strategy. So I typically talk in terms of that. So like if your win rate differential is like even like 5%, which is not that good. We have like 10+% on most of the Kairos strategies. But even with that 5%, like you're going to watch something that's successful, and you're going to see that edge kind of work out in the longer run if you can just watch it and let it play out, not jump around to different things and do a bunch of strategy hopping.
Yeah, I think that that's one of the biggest pitfalls that people fall into is strategy hopping. And if you find something that works, sticking with it and allowing it to, play the math game and use the math that's been developed on it and optimized on it, so that over time your sort of win loss goes straight up. Now, where I think the other pitfall that can really hurt people is sizing, right? Anything that you oversize, no matter how profitable that strategy is going to lose money, especially in the prop firm world, right? You have a limited amount of available prop firm money, and you have accounts that have trailing drawdowns and various rules, consistency rules, etc. So there's lots of things that can actually sort of trip you up, and so finding a strategy that can perform within those rules, one, and make money and in compliance with those rules over time, if you're sized properly, is really important. Now, I think the question a lot of people have is like, how do you figure out sizing? And I think we could do a whole session just on position sizing, no matter what strategy you're using, right? But I think that what this strategy does very well is you can set this up to just be one micro, right? Like Lee has it up right now. It just trades one MNQ. if you go to the strategy report on this, right? And you look at, can you click on the strategy report?
Yep.
And go to the list of trades. You can see what your biggest losses are going to be per micro. And then you can adjust in the ClearEdge software to be, this is the biggest loss you're going to have here is $108, or whatever that is. So you can adjust it using the multiplier. Say you have a 50K account.
Right
if you want to take 200 risk per trade, you change that to 2. If you want to take 320 risk per trade, you change it to 3. If you're running a 150K account and you want to take 500 risk per trade, you can change that to 5. But it allows you to use sort of the same alert for running to multiple accounts, which I really like. A lot of strategies, make you have to put in custom sizing and stuff through the strategy, and that's one of the real advantages of doing it this way and running it on micros is what your risk is very easily, and you can bring it up as you want to adjust that risk higher.
Yeah.
Now, let's talk about a little bit about the trade logic here, and obviously you don't need to give like a high in-depth detail, but more of a high level overview. Like, what is this looking for? What markets is this gonna trade well in? Yeah, go for it.
Yeah. So this one's going to be Kairos bands. So we have Kairos bands, and then we have 2 more in development. One is Kairos moving averages, and then the other one is Kairos initial balance. So this one is going to be the most versatile out of the 3 of them. You're looking for you have the Bollinger Bands that are the main logic to it, so that's something that you can't change. But then the rest of the confluences, such as RSI, those are all adjustable. Sorry, my son just ran in here. But those are all adjustable, and you can kind of find, depending on what you want to do. So if you wanted, if in the Kairos Discord, I posted some ES settings that were mean reversion. So they were meant to actually utilize the exhaustion filters that are in there to actually try to hit pivot points, to try to actually catch a high in trade like that. Now, most of us on using Kairos right now are not using it in that way. We're using it to follow the trend. So a lot of the exhaustion filters are set to kind of like a golden pocket area, that it's more of a measure of, is this going to continue than is this exhausted?
I think that one of the best things about it is the presets too. Is a lot of people have a hard time, once you try a strategy, what settings do I need to put it on, or how much actual work there is. As a whole, most people don't want to do a lot of their own optimization. It's just what it is. And the fact that you guys sort of did presets for all these different instruments is really important and really easy for people. And I've been very impressed with the guidance and help that you guys have been giving people getting started.
Yeah, that's all due to Brad is the one that decided to do all that. When I create stuff, I'm thinking more about what I like to do. So I typically I like to tinker and I like to play around with the settings. So I'm like, oh man, people are going to find this so cool that they can go create their own unique strategy, where typically Brad has more of the brain. He's like, no, people like to have something and kind of plug it in. So I'm hoping that there are people out there that are going to be more into hey, I want to make my own system out of this. And when I'm trading prop firms, I'm not trading anybody else's trades. I'm doing my exact trades because I set it up myself.
Yeah, that's the beauty of this. There is so many ways to customize this strategy and others. But out of the gate, you have some settings that have been test forward and back testing profitably, and can just get you going right out of the gate.
What instruments are you running it on, Lee?
I'm running it on silver. I have a couple of different instances running on NASDAQ, the 2-minute and the 5-minute. And I'm running it on MES. And I was looking at RTY today, but I haven't started it yet. I
think RTY is best for market hours.
Yeah.
Um, I mean, I'm running the silver on just evaluations. I don't have that running on any funded account because that's
Same.
going to be really, really up and down and swingy.
It's a good one to either pass or fail accounts quickly.
Yeah, it's going to do one or the other. That's sort of the nature of silver, and
which is
as a
fine. You
whole.
know, we preach to people, you know, if you got to blow 5 evals to get to a funded account quickly, that's fine. You know, whether you're buying a cheap Apex or Bull Knox or a Top Step for $50, whatever it is, if you can get through that account in a couple of days or in a week, you know, you blow 3 and pass 1, then you got yourself a funded account for a few $100 plus the whatever activation fee is, $150, whatever it is. So for $400 or $500, you got yourself a funded account, and that's fine. And if you want to go, you know, take advantage of like an Apex or a Bull Knox for $20, you know, you can be even more aggressive and blow a whole bunch of accounts just to get to a quick funded account. So that's what we try and preach. You know, it's okay to oversize in these evaluation accounts, and then get yourself some fundeds pretty quickly and get on the road to getting some payouts. That's the goal here.
Can I ask you guys a question?
In the chat that you have happy kids, David.
Oh, can you guys hear him?
Yeah.
That's all
Yeah.
good.
I have a question, just
Sure.
maybe a discussion point. So I was talking to somebody about the longevity of algos. So like people put out an algo and it might be killer in the beginning and then it kind of dies out. So what do you think like makes up an algo that can actually like make the last a long time and to continue adjusting to the market compared to these other algos that are kind of one-hit wonders?
I mean, there's edge erosion is a very real thing in automated trading. And it's part of sort of the art versus science of it. It's not like a one size fits all, you know, cookie cutter type deal in terms of what is going to make some things edge erode over time. Now, I mean, the only strategy that I have yet to see edge erosion in is actually also on the marketplace, and that's Secret Lab. Because I've personally been running that nearly 2 years, and I think it's maybe had 2 or 3 down months. But I think what happens is that market conditions change, and also as markets go up, ranges tend to get bigger, right? It's just sort of a 1% day when the S&P 500 is at 4,000 is going to be, in points wise, much smaller than a 1% day right now, right? And so I think over time, especially on indexes, you have strategies that don't change and adapt to daily ranges or monthly ranges and volatility that is in the market. And I don't mean by having some like VIX filter or anything like that. It's that the vast majority of strategies are going to do great in one type of market and do not so great in another. And over market cycles, you're just going to get different types of markets. So I think that when things tend to go south on strategies and they tend to be losing, you can pretty much see the reason why something is eroding, right? Is it eroding because the swings are too big and it's hitting stop outs? Is it eroding just because, you know, that strategy? You see it a lot with like EMA based or backwards looking indicator based strategies. Those almost never last, and like they never last because they look in the rear view. They're not looking forward into what's coming or what is actually trading. They look back at what did trade.
Yeah.
So I think that it's a really difficult thing to answer why something is going to erode. I think the more important thing is determining the difference between edge erosion and drawdown. And if you see something that is in drawdown, being able to decipher whether or not um, it's sort of a standard deviation of normal, or is it the edge for that strategy eroding? And that's where I think people can get really, really in trouble. And it's
you need something objective.
Yeah, and their mind sort of spins, right? Where they get this inherent bias that this strategy doesn't work now, right? Or I'm going to turn this off because, it hasn't worked for the last 2 weeks. And that can be a really dangerous thing because it sort of puts you in this cycle of constantly tinkering, changing, messing with things. When in fact, especially when you're trading automated on the prop firm level, you're going to have blown accounts in prop firm trading. You're going to,
if you take advantage,
hopefully you get payouts, and can exhaust your payouts before you blow that account. It's just going to happen. It's part of, you're playing a numbers game, and prop firm trading, and it's a sort of a controversial fact, but I look at it as a fact, actually. Prop firm trading and real trading are not the same. Prop firm trading, it is just a pure numbers game. And I think that as long as you're finding things that are effective in the current market, which is, you can find things that are going to be effective in the current market. If something's edge erodes over time, it's less of a big deal. You're able to sort of pick up the slack with things that are coming around. So you do have to keep an eye on things. Things don't erode overnight. They don't erode in a week. They don't erode in a month. They tend to erode over multiple months. And
it goes with what I was saying before, is as long as you're continuously optimizing your strategies every 3, 4, 5, 6 months to adapt, because if the like Dan was saying, if the S&P is a couple thousand points higher, or the Nasdaq's a few thousand points higher, those strategies that are based on a certain points move, not a percentage move, are gonna have different results. Just a fact.
Some of the most effective automated strategies I've actually run auto calculate the stop loss amount and take profit amount based on ranges and based on the size of candles, the velocity of candles. That's been some of the best stuff that I've run over time that tends to not erode, is the stuff that's adaptable to different swings and different swing sizes in the markets.
Yeah, absolutely.
I think it's very difficult endeavor to do that, though. It's discretionary trading is quite the math is a lot easier, right? You take a trade, you're risking X amount for Y amount of reward. You are in automated trading, it skews that math. So people who started with discretionary trading often have a hard time going from one to the other, because if you're running multiple strategies, or it's, your risk actually can get much bigger, much quicker. And I think that that's a much bigger issue for most people than over time seeing edge erosion. So Willie asked a question. So Kairos bands set to inverse or more breakout. No inverse is more exhaustion / mean reversion. Is this correct?
Yeah, that would be the main thought to it, but always think out of the box. I mean, if you throw some settings in and make it work, it works. So it's that's how I kind of found this idea to begin with. So I want to say,
wasn't this idea, and correct me if I'm wrong, birthed out of finding a really bad strategy?
Yeah, I actually reversed an algo because, hang on, baby.
We won't mention the name.
Yeah,
So it's
Although
actually
maybe that's how we could finally find the owner of that one, because if we slander him, maybe he'll sue us, and then we'll finally be able to get hold of him.
Yeah. Finally, yeah. No, Brad, the co-creator, and I, like, we were just, for one, frustrated with the just lack of support in the general kind of algo space, especially the algos you see that get there's a lot, I don't know if you guys can hear the pounding, but somebody's pounding upstairs. But like lack of support. But yeah, I was trading that, and I was doing okay when I was doing it the regular way the algo was supposed to do. But honestly, it just didn't fit my style very well. For one, like I'm not like a reversion trader. I don't like to trade reversion very often. So that tends to not really be my style. And then like I like quick scalps, so I just reversed it and I said, let me try this for a bit, and I ended up making just thousands of dollars in payouts from prop firms just by doing that algo in reverse. And I was like,
I think it's actually genius. Is find the worst strategy you can find in the world and do the opposite.
Yep. Yeah, and it was consistent.
I really think
consistently bad.
Really
it was consistently bad, so it worked out pretty well. But yeah, that kind of got refined, and then what we have today, I would just say, is just way better than what we were doing on that other algo. So it's has my personal touches to where there's trades that don't enter that we used to get entered into that just drove me nuts because I would have to either sit there and make sure I don't get into that trade. So yeah, it's getting rid of a lot of that stuff and just making it more user friendly. And then people copy algos all the time anyways. So I wasn't really going into this like, let's hide everything. So pretty much everything in this algo is out in the open. What I hope to offer with Kairos is to be able to be hands-on support with people. If you need a question, you can contact us and actually understand some of the logic behind it and why we do stuff. And then also, I just think you can try copying it, but it's going to be good regardless of if 10 other people do it. And I think it will be with us constantly putting out new stuff and updating it. We're going to be ahead of the curve a little bit with that.
And let me ask you, how's your experience been running Kairos on the ClearEdge software?
Great. Yeah, I have right now I'm hooked up. I have a whole screen of stuff right now. So I have RTY hooked up, which took looks like that did pretty bad today actually. And then I have let's see. I have the Secret Lab hooked up.
Well, RTY had a crazy good day on this yesterday, so
yeah, I did. Yeah, I did pretty well yesterday, so
it gave a little back today for sure. It's not as much as it made yesterday though.
Yeah. And then I have gold set up, and then my NQ strategies, which right now my main ones that I like the most are gold, and then NQ, MNQ, and MES. Those are the ones that I typically tend towards the indexes anyways, and then maybe like one or two metals, mainly gold. So that's kind of how I like to diversify for my main accounts.
Gold is the best trading instrument, I think.
Yeah. I like it a lot.
That's the nice thing with the software is you can run multiple strategies to multiple accounts. So it just makes it super simple.
Yeah, you could really scale up what you're doing. My partner, he was talking about just being able to use ClearEdge and use the grouping in Tradeovate and being able to have the 20 accounts, where if you were to go to another automation company, you'd be paying for the separate accounts. So you're able to do a lot more with it in certain circumstances.
Yeah, and I think that's part of playing the prop firm trading, right? Is leveraging the amount of exposure you can get by having many accounts versus having one or two large accounts. And I think that's where people who are successful in the prop firm trading world, they tend to do the best because they leverage multiple multiple accounts and play the numbers well, you know. And I think that that's what ClearEdge does really well is allows you to use that group trader and trade of eight. If you have multiple accounts, you can just sort of send all of them. I mean, just the math on, you know, if you have 20 accounts across 5 prop firms, right? 20 accounts times if each account can make you $100 a day, 2K a day, that's 10K a week. That's $252,000 a year. So,
Yeah.
you know, if you can manage to figure out how to make 200 a day on 20 prop firm accounts across 4 different prop firms, you know, it's really the sky is the limit. And I think that that's what people who are incredibly successful doing this stuff on the prop firm side
Yeah.
do very well, as they use that leverage that's available. They keep their sizing really small. That's something that I preach all the time. Like I have, I don't know, I only have 7 funded accounts right at the moment, but I mean, I do not want to have much more than 1 or 2 micros in play at a time. And the reason is that those funded accounts are worth a lot more to me open than they are blown. And you know, if yeah, if I blow those accounts oversizing, they can't pay me. So
Yeah.
trying to use the
Um,
leverage of the multiple accounts, and it does take some time to build up sort of your account count, but and over time it can be done. And then once you get funded, you hone back the risk and you take your time.
Yeah.
I mean, one of my newer funded accounts that I've been only running Kairos on over the last, well, actually, I ran 2 of the marketplace strategies, Kairos and Market Ninja on gold. It's a 1-minute gold strategy that trades 2 micros at a time. And I have Kairos trading 1 micro on
Yeah.
MNQ. So, I mean, it took me approximately, let me just double check. Let me look. 18 trading days to get a payout. And this is on Top Step. 18 trading days to get a payout. The account after my first payout, which was 1,400, is now back at 2,200, and that was a couple of days ago. So, you know, it's taking your time. It's building that account. Yeah. I have taken a $500 payout a little while ago on this account, and yeah, I could have, but the goal was to build it up so that there was a nice buffer that I can afford to $300-400 drawdown a day if it happened. And I don't need to stress about that, because I think where people getting themselves in a lot of trouble is they stress about those days, then they start smashing buttons themselves to dig themselves out of that hole. And instead of and I've done that a lot myself, and I can count on probably one hand the amount of times it's actually worked. So yeah, you gotta sort of play the game and know how to play that game.
Yeah. Yeah. I never fell super hard into like the oversizing and like trading.
Absolutely, yeah, because
It was, yeah, I know people. I know a lot of people that have really fallen into that. But that's a lot to do with just who's training you and who's showing you what to do and what they're teaching you. Because I think a lot of people,
and your own personal psychology too, and how you look at money. You know, I think that has a lot of impact on how people trade automated. Is their own psychology and how they personally look at money, and how and their relationship with money, right? People who don't have a good and healthy relationship with money, and what I mean by healthy, it doesn't mean that you have it. It's that they people who overspend, you know, habits and money habits in general carry over to trading. And you know, if you have sort of unhealthy respect for money, and it can go the other way too. People that are too loose with their money tend to be they tend to gamble too much in the trading world.
Yeah.
It can be equally as damaging, and when people are too risk averse, where they are unwilling to put sort of chips in the middle and take any sort of risk.
Yeah.
Trading is a game of risk versus return. And if you aren't willing to put any chips in the middle to take any sort of risk, then you're never going to be able to get a return. And I think that's where automation and softwares like ClearEdge and trading systems like the one that you guys have developed here can do so much for people in sort of changing that relationship with and respect for the math of trading and to be honest, the money and understanding putting $1 in doesn't necessarily mean you get $1 out. Some days it can mean you get 3. Some days it can mean you get 50 cents. And it's over time you want to make $3 more than you make 50 cents and making sure that you can stay in the game long enough so that the math starts to work in your favor. If you get knocked out of the game fast, the math doesn't start working for you.
Yeah.
What's your thoughts on evaluation? Sort of what's your evaluation strategy? Because I always like to talk to people about this, and I know Tommy's in here, and I think he looks at things the same way as I. Lee looks at things the same way as I. As evaluations are a means to an end. They don't mean I can't make money on them.
I don't want to be in them.
Right, I'm the same way.
Yeah, I do have a specific strategy that I go in, and the guys I talk to, I have like 3 guys that we are really close together, friends from church, that we have developed and kind of thought through a lot of these things together. So one of the things that we just kind of started enacting was having an idea going in. So like a set thing, like, what's this month look like? Are we trading conservative? Are we doing a balanced approach? Or are we taking an aggressive approach? And then we're going to have for like our XFAs and different funded accounts, that's going to mean a certain thing depending on what category you're in. And then also for evals, that's going to mean a certain thing for each, depending on what eval you're doing. But then also I take the approach of I'll go in and I will double my size after 2 wins. That tends to be pretty successful in getting these passed a lot quicker. So I'll take a couple wins on the day, and I'll either be on break even and have the same drawdown the next day, and of course that only works for certain accounts, like the trailing end of day drawdowns. So that way I'm either at break even, but still have the same exact drawdown as I would be if I was up if I would have won that day.
Yeah, I think I'm even more aggressive than that.
Yeah.
I mean, if it's top step, I want to be no more than 2 days.
Oh yeah, definitely.
If it's 1 day to pass, I want to try and be done in 1 or 2. Usually, personally, I manually trade evals.
Okay.
I don't automate evals. Just because I feel like I manually can pass them faster.
Yeah.
But everyone sort of looks at them differently. And Lee, I know you sort of look at things the same way. If I fail 4 evals in the process to get 2 funded accounts, I think we both agree I'm making out.
Yeah.
Lee was saying that in the chat yesterday. That makes a lot of sense. Yeah.
I mean, let's say.
I mean, most of the evals that I have now that are running automation is more for testing than anything. Like, can you size appropriately, and pass this thing, sort of set it and forget it, and absolutely you can. Actually, I have a top step I started a few weeks ago, 50K, and it's up to I think $2,400, and I haven't touched it. I just let it go, and it'll probably pass within 30 days, maybe a little longer, but just testing those kinds of things. And it's helpful once you get to a funded account, so okay, how can I be safe and not blow my funded account? Because once you're funded, you want to be a little more respectful of like it's real money, because it is.
Yeah.
We've got about 5 minutes, guys. Then we have to bounce onto another meeting. But just wanted to come on here and show you guys what we're doing, show you the new strategy, the Kairos bands, which is in our marketplace. I showed it a little earlier. This is our marketplace. Everything lives within our software. So if you want to subscribe to it, you just come in here. It's $40 right now, but it's a 7-day free trial. And all the strategies.
You can't see it on the stream. I think it's the things are in front, but no. Yeah, never mind.
So it's like we said in the beginning, just come in and if you're using the software, subscribe to some of these strategies. We'll have other strategy vendors on Friday and next week talking about some other things. But right now, Kairos is been really performing well. It's super versatile. Whether you want to run it on NASDAQ, MES, silver, gold. I think it's even got a setting for micro Bitcoin.
Yep.
So whatever your bag is, it can do it, and it's nice to have that versatility in one strategy. And of course,
it's bang for your buck too. I mean, I know you guys are pricing it at right now. I think what'd you say, $40 for the first 50 people or so that buy it.
Yeah.
I mean, that's a crazy steal for something that can trade more than one instrument. So, folks, if you're thinking about it, it's worth at least trying a 7-day trial on it, seeing what it looks like in real markets, seeing how it trades, seeing if it trades into sort of your style, and go from there.
I mean, this is the NASDAQ settings that's been running, since the overnight session. So it started 11:30 last night, and it's had 3 winners and 2 losers, and so it's up about $100, just over $100, maybe.
Yeah, I run my personal settings on NQ, and I'm up 2 wins. That's it.
Yeah.
So, yeah.
So
if you're up 2 wins, right? 2 wins is a good day.
Oh, it's a great day.
So like people
like
need to think about, like, if you're taking 5 trades and 3 of them win, and you're at 1-to-1 RR.
Yeah. Yep.
And it's overly simplified way of thinking about it, but it really, you got to retrain your brain to how you think about things. I think when you automate your trading, it's once it clicks though, man, is it there's a lot of freedom that can be had
and fun.
Yeah, you've got kids. You can not worry about stepping up away from to go feed your kids. There's things that if I'm in a trade, in a manual trade, I just couldn't do before. I couldn't be on a live stream. I couldn't have a meeting or be working. There's a lot of freedom that comes with automation, and but with anything else, there's a learning curve. But we're here to help people. And I know you are as well.
And this is the 30-day performance of this one, just on one.
That's on one micro, right?
One micro is made just over, call it $2,000, about $500 in drawdown. So that could even
not bad taking $100 and risk a trade.
No, that could even go on a 25K account. You passed and you're trading in a live account, and you stayed well within the $1,000, $1,500 drawdown, whatever they have on those 25Ks. Or you can double up, trade 2 contracts. You pass in 30 days, you enter your funded account, and hopefully month 2, month 3, you're taking a payout. Because over 90 days, if we look, it's done almost 7K with 600 in drawdown. So you can absorb that with 2 micros, $1,200 drawdown. You're making roughly $4,000 a month.
Yeah.
Even if it's underperforming a little bit, maybe go sideways for a few weeks. Just over time, you let these things run, and continuously just looking at the markets and adjusting things as needed. If the VIX spikes next week 30, 40, 50%, you know, you may want to size down a little bit. But right now, you just go with what the charts are telling you and what the back tests are telling you, and your forward tests, and make sure everything's matching up.
Yep. Yep, absolutely. Well, guys,
Thanks, guys.
it's
We got
been
to
a
run.
pleasure.
Thanks, David, for joining us.
Yeah. Thanks, guys,
Have
for
a good
letting me
rest of your day. And
You can go to ClearEdge.trading, where you can sign up for ClearEdge software. It's 7-day free trial. Jump in, get your free trial, then go into the marketplace, subscribe to the Kairos, get the 7-day free trial there, and it's risk free. Just go do it, and we're all available to help you get set up and make you, make that transition, diving into the software and the automation, as easy as possible.
Yeah. Thanks, Lee.
Thanks, guys. Have a good one.
All right. See ya.
Bye.